Hello and welcome everybody here on the YouTube and Discord channels of Bookmap. My name is Oliver Sperring. I'm a professional trader for 13 years now and also the CEO of the Sperring Academy based here in Dubai. We are offering long-term investment courses and educations as well as trading courses for swing trading and day trading, which is a lot of fun, but today I'm happy to be here once more on the YouTube and Discord channel of Bookmap to have this webinar session together with you guys. Just in case you're wondering, I seem to having my first Dubai cold. It reached 41 degrees Celsius outside, while downstairs the lobby is cooled down to 18 degrees Celsius. Guess my body can't handle that. Just in case you're wondering why my voice seems to be an octave deeper than it usually is. But I'm fine. Things are getting better. So, what's the plan for today? First of all, we're gonna start to have a look at one of the trades that I recently did during the last week. You know, we've had Memorial Day holidays on Monday, so I recently didn't do a lot of trading during this week, but I did a very nice trade in the last one, which I'm going to show you. It's also in the ES future, and yeah, I'm recording like each and every one of my trades that I basically do because I want to offer them to the students in my day trading educational program. And as every last Wednesday of the month, we're going to have a look together at one of these trades, and I'm going to show you how I use the software Bookmap to actually get into the trade, to manage it. We're going to analyze the basic situation, what my idea was, and hopefully you'll get some inspiration for your own trading systems. Afterwards, we're going to have a look at the questions of you that reached us during the last weeks. This is supposed to be an interactive webinar as always, so please feel free to use the chat function of YouTube or the chat function of Discord. I'm going to have a look at your questions and the chat from time to time, and I'll give my best, like always, to answer each and every one of your questions. In case you're not watching this webinar live, but the recording afterwards, please feel free to use the comment section to ask your questions, or you can also send us an email to mail@sperring-academy.com. We're going to collect all the questions and I'm going to answer them in the next upcoming webinar. As soon as we're through with your questions, we're gonna have a look at the market profile and volume profile to make a quick and effective market analysis of the ES future. We're gonna have a look at some basic but still very important levels that you should, draw into your charts each and every day, because you're going to see nice reactions to those levels on a regular basis. And as soon as we're through with that, we're going to switch over right to Bookmap to have a look at the market opening of today. We're going to see where liquidity lies. We're going to have a look at the market opening to see if we maybe got an open auction or whichever opening type we're going to see today. Going to have a look at the trend and hopefully find some good trading opportunities during the regular trading hours for today. Before we start, as always, let me just share my screen with you guys. I have to show you the disclaimer. Everything that I'm going to show and tell you today is for educational purposes only. Trading, and especially trading futures, involves a lot of risk, and therefore each and every one of you is responsible for his own trading decisions. All right, let's start. Hi Marcus, nice to have you here. And I'm gonna show you a trade that I did in the ES future last week. If you already joined my session in German language yesterday, you might already recognize the trade. It's the same one because actually, as I said, I didn't do a lot of day trading in the last days. Hopefully this will change in the next week. But since this is a very nice situation, I'm happy to show you the same trade in the English stream here as well. So, as I already said, it's a trade in the ES S&P 500 future, and we're gonna have a look at the basic situation first. So, what you're seeing here on the left side is a usual 5-minute candlestick chart, and on the right side we obviously got Bookmap. What you cannot see in this situation is the bigger picture movement, so the long-term trend, and this was in this case an uptrend. So in my morning market analysis that I did together with my customers, we predefined some locations, some price levels, price locations where we're looking to find good opportunities to enter the market on the long side. So since we came down here, we had a major pullback on this certain day. It was, let me just check, it was the 23rd of May, so last week. We had this pullback situation here, and we came down to the level at 53.20, where you can see we've got a lot of lines drawn on this price location. So every morning, together with my students, I'm doing a very specific kind of market analysis where we combine different objective factors into this analysis. We're having a look at obviously market profile and volume profile levels. We're having a look at longer term liquidity. We're involving VWAP levels. We're involving dealer hedging levels, Gamma, Vana and Charm. We are going to have a look at dark pool levels, and we're combining all these concepts, and therefore we're able to combine these levels into very powerful trading locations where we can find great opportunities to enter the market. However, I always tell my students that it's never just a line or a location that I draw into my chart and then I just place a limit buy or limit sell order on this location. These locations, the market analysis itself, just answers the questions where I want to trade. It's just one part of the matter. So the market analysis surely is the foundation of everything that we're doing. We're defining the prices where we want to see price action, where we actually want to enter the market. Sorry, my nose is running. But still, when the price reaches these levels, it's not that we just press buy or sell buttons, but we want to take a look at the order book. We want to take a look at Bookmap, and there we want to observe how market participants are actually trading with each other. Are they actually trading with each other? Which party is stronger? We're going to have a look at passive market participants. We're going to have a look at active market participants. We're going to have a look at the velocity of the market. We're observing certain order flow events like, you know, stop runs, absorption, iceberg orders, exhaustion, things like this. And of course, we're also having a look at the price action, which plays a major role too. And only if we get our original idea confirmed by what the order flow is showing us, then we want to enter a trade. So what can we see now? Market is coming down to the location. It's confirmed by various levels. We've got negative gamma down here. I can see a dark pool level. I can see a very important anchored VWAP from the bigger picture chart. And therefore this was a location where I wanted to see some confirmation to enter the market on the long side. That's the basic situation that we're looking at here. So now let's switch over to Bookmap. As you can see, price is coming from a short movement on the local basis. The the timestamps that you can see on down here, those are the ones from my Dubai time zone. So you should subtract 2 hours to have the Central European times, and you should we should have 8 hours difference to the Eastern Standard Time of New York. So just that you know where we're or what time we're actually looking at here. Excuses. So, market is coming down to our level. What we can see first is that we've got lots of liquidity down here. We've got longer term limit orders here in the bid that were resting on those levels for all day, and as far as I can remember, even the day before. And as you can see, as soon as the market approaches this level, liquidity is added here in the bid. Now, some ticks before the first gamma level that we're reaching here, we can see that the liquidity down at 53.2150, around this price, gets filled. And we also can see the first stop run at the level here. 371 stop orders were filled right before the market approaches the actual price location. This is our first, but a very important order flow event that we can actually have a look at. And as you can see, we already had a local low right before this in the same session here, right after market opening. Market comes down to these prices again, falls down below these levels, fishes the stops, and actually approaches our level now. And what we can see now is that there's more liquidity coming in, more orders filled. Again, at some deeper prices, we've got further 164 stop orders that were filled. And after that moment, what we were able to see is that the market velocity stopped for a while, and we can observe the first buyers entering the market, which is nicely visible here through the volume dots. You're certainly not used to my colors. Those teal colored bubbles, those are the market sellers, and the white bubbles, the white dots here, those are actually the market buyers. So just in case you were wondering what my color code is meaning here. All right, what I can also see is that the delta is rising. So there's obviously strength coming into the market. Now, what I have to say is, in case you already attended my my earlier sessions, I'm usually the kind of trader that waits for confirmation. I'm usually not the one who chooses a very aggressive entry into the market, which I actually did here. So this is usually not the point in time where I would enter my trade in most of the cases. Nevertheless, I did so here, and I actually did that for a reason, of course. It was just the location and the price action that I've actually seen here was very strong. And I basically was just waiting for the first best opportunity to get into the market. Usually I'm waiting for a small range in the microstructure building up on that level, and then I want to see a sweep of the party that I actually want to position myself with, in this case the buyers, and that's when I want to enter my trade at the first pullback to those breakout levels. But as you can see, in this case I've chosen a very aggressive approach, a very aggressive entry, because the location was very strong, and as soon as I've seen that most of the liquidity here was filled, there was nothing. Well, there was one more bigger order lying down here at the negative SPY gamma level, down at 53.11. But we had the clear imbalance of liquidity lying above the current price in the ask or in the offer, however you might want to call it. And that's why I've chosen a very aggressive entry here. First contract I bought around 53.20, and now let's click play. Just in case you're wondering, I've rendered the recording later and played it on a faster pace because it was a longer kind of trade, and I always cut down my trades to 1 minute so they actually play faster and we can have a short and quick and effective look at the situations. So let's go for it. First contract is in the market. Now we can see that there was a second order filled down here right after this little iceberg was filled here. And I think my average price was around 53.1850. So let's just keep it running for a while. Okay, and let's just pause it here. Sorry, cold is keeping me busy. Okay, so what we can see here is that the market actually has shown us some movement into our desired direction. Market buyers actually entered the market here, and we got the sweep that I usually want to see before clicking the buy button. So under normal circumstances, I would wait for this kind of movement before I even think of entering the market. But as I said, in this case, I've chosen a more aggressive trading style. Stop order is lying right below this cloud of liquidity down here at the 53.15. So we've got a 3.5 points stop, 14 ticks, and the target limit I've chosen to put up here at the yesterday VWAP closing price, which would be my next level of interest, where I actually would expect the market to show at least some kind of rejection. So if we're going to take a look at the possible risk reward ratio that we can reach here, as I said, we've got 3.5 points of risk in this case, and we've got 1850 up to 2950, 3050, so we've got around 12 points of possible reward with this trade. So very nice situation in this case. We're actually seeing some follow through, which is always nice in day trading. You know, it's always good to see the idea you actually had with the trade playing out as fast as possible. We talked about these kinds of situations a lot in the German streams. The longer the market tends to run sideways after you entered it, the longer it takes to actually do what you thought it would do, what your actual idea was, the less your chance grows that the idea of your trade actually plays out. So follow through is a very important thing, and yeah, the faster we can observe the market actually doing what it's supposed to do, what we expected it to do, the more aggressive we can either build up our trade, or in this case, it wasn't even my plan to actually build up further contracts, but it gives you a lot more confidence, and you can leave some more room before you actually change the position of your stop order. So enough talking. Let's see what the market does now. Market's going up, running a little sideways before it makes the first smaller pullback back to the level. We've got some liquidity coming in here down at the 53.20, and I used this kind of liquidity to actually move my stop order to the break-even point. So at this point, I'm safe. Nothing can happen anymore. And the worst thing that can happen is that I actually get stopped out with a break-even trade in this situation. Oh, by the way, we had a really nice conversation about this topic yesterday in the German stream. I accidentally forgot to show my P&L on the left side. You know, if you follow my trades, I usually have my P&L open here on the left side, and it's just I might have forgotten this on this case. But on the other hand, I do think that hiding your P&L might not always be the worst idea, especially when you're not, or let's say, especially when you're a beginner and maybe you're making your first steps in day trading. You do not have as much experience as a professional trader, and obviously seeing these numbers here on the left side can cause some emotional, I wouldn't call it emotional damage, this would be too much, but it does something with your brain. Because what you're usually doing, or what most people are doing, is they compare the amounts that their account size is actually increasing or decreasing in real time. They're automatically connecting these amounts of money with their actual financial situation, if you know what I mean. You always compare those kinds of sums with what you're actually earning in your real job. And of course, this makes your brain start to think. It makes your brain start to think about how long would you have to actually work in your real job to earn these kinds of money. Or if the trade goes against you, how long would you actually have to work to earn back the amount of money that you just lost with one single trade within seconds or within minutes? And it's just a completely normal thing that this makes you, or how should I say it? It makes the situation more difficult to handle for you from an emotional perspective, if you know what I mean. So, of course, in order to be able to hide the P&L, you have to at least to have some experience on how much the markets move. If you see this kind of movement in the ES future, and let's say you're trading one contract only, you should at least have a basic idea of what this movement would do with your account. And you have to have a basic idea of the numbers that you're actually moving here. However, as soon as you've got this kind of experience, I would tend to give you the tip, try out and hide the P&L. Just don't look at it throughout the whole trading session, and just open it up as soon as you're finished with your trading at all, after the complete session. It makes you trade less emotional, because you're not as much attached to the numbers, but more on what the market is actually showing you. And let's be honest, this is the most important thing for us in the discretionary day trading style. We want to trade what the market is actually showing us. We want to collect objective information that the market is showing us. We want to interpret it in the most effective way, based on our experience and based on market theory, of course. And to actually stay as objective as possible, I think it's a good idea to not have a look at the numbers all the time. So just a small tip on the side. But next time I'll make sure to actually show my P&L again, because obviously it's an important information for most of you. So guess we have to calculate manually this time. So what we're seeing now is a small pullback. As I said, I moved my stop order to the break-even point here. As soon as I've seen some bid liquidity coming in here at the 53.20. And now let's see how the trade actually played out until the end. We can see the buyers coming back into the trade. The microstructure has shown us a local low here, which was a nice point to actually move the stop order again. Now we've got the first little exhaustion run here. And as you can see, there was some liquidity coming in here at the 53.30. So I moved my target order one tick before that order, just in case there are stop running algorithms who prevent the market from reaching that level. And as you can see, I was taken out of the trade by the limit order here at 53.29.50, I would say. So we actually made 11 points of profit here, which would be 44 ticks, which would be a risk reward of around something over 3-1. So very nice trade. And yeah. All right, before we move on with the questions of today, let's just have a look at the questions. Trading platform comparison, Atas. Yep, well, as you know, I'm using a combination of Bookmap with Atas as my classical charting software. In this case, I was on my MacBook. That's why you're actually seeing the TradingView chart here. But usually I'm trading on my professional Windows trading PC, and that's where I'm using Atas as my main analysis software, which you can see here. But before that, let's just move on to some of the questions that reached us during the last weeks. Yeah, in terms of software, do you use any software beside Bookmap and Atas? Well, yes and no. So if you're new to trading, if you're just starting to get your first experience and making your first steps, what I would recommend to you is keep it simple. You actually need a charting software, whichever you want to use, TradingView, Atas, Sierra Chart, NinjaTrader, whatever. You need a software to actually make a market analysis in the morning or before your trading session. And you need a professional depth of market or heat map, and that's where Bookmap comes into play as generally the most advanced and professional heat map software on the market, period. So the first steps that you should always take is just get used to these kinds of softwares and build your first trading systems around them. A good analysis software, a good charting software in combination with Bookmap is generally enough to become a professional and profitable trader. You do not need anything more. However, as soon as you're thinking about doing this as your main profession or becoming more advanced, becoming more professional, and maybe, sorry, this was my camera, maybe including more fundamental factors into your trading style, it's of course not a bad idea to actually have a look at certain kind of data sets or certain kinds of data software that can either give you an edge or improve your edge with your existing trading systems. So what I'm using beside Atas and Bookmap is actually TradingView. As I just said, as soon as I'm on my MacBook Air, I'm using TradingView during the day because it's browser-based. But in terms of fundamental analysis software, I'm of course using my own software, which is called TradeNeon. We're going to have a look at this later. It's basically a swing trading software where we can analyze certain data sets like the COT report. We've got very advanced algorithms that are actually analyzing the COT report and providing the data in very advanced kinds of graphs and charts. It also includes seasonal patterns. It includes the term structure in order to see if, especially in the commodity in the commodity futures, if a certain kind of commodity gets scarce, and we can find good buying opportunities in these times. So this is more a software that I mainly use for swing trading. In the day trading context, I am also a user of Voland, where what I'm using for is, or what I use the software for is the analysis of the dealer hedging levels. I'm gonna have a look at the general hedging requirements of the day of market makers. I'm going to have a look at charm exposure, Vanna exposure, and of course, most importantly, of the gamma levels to have an idea of where the market will certainly react in certain ways and how volatility will behave in certain areas. And I'm also using a software which is called Traditix, for further analysis of dark pool levels and some options data. So this is the software that I am using. Okay, next questions. Do you also trade options? Absolutely, I do also trade options. In the day trading context, most of the time I'm trading the future contracts directly without any options. I'm trading, or what I'm currently working on is a zero DTE trading concept, but that's a future project. It's still very much under construction. But for my swing trading approaches, I'm mainly using options as my choice of trading instrument. I absolutely trade options, and I would recommend you to actually have a look at options. They are the most interesting, but also, of course, the most complex trading instrument out there. But especially for private traders, in case you're trying so hard for years and years, but you just can't get to the state of constant profitability, I would strongly recommend for you to check out options and options trading, because apart from everything that you're analyzing here with Bookmap in the order book, the option itself as a trading instrument can give you a great advantage before you even think of analyzing the markets in any way. So yeah, trade options. Definitely. Last questions. How do you transfer hedging levels from the SPY to the ES future? So I do not want to dive into that too deeply, because it's dealer hedging in general is quite a complex and complicated topic. By the way, we just published our dealer hedging online course in German language. Purely online course, video course. I think it came out great. I'm really satisfied with the results, and I hope that we can actually also publish the course in English language too during the year. But yeah, I think we still might need 2 or 3 months until we get to the point where we can actually publish it in English. But it'll come, and it'll be great. But back to the topic. Hedging levels from SPY to the ES future. So first of all, there's the mathematical approach. Let me just show you a very practical approach to actually get a SPY level into the ES future. So what you need is either a software that you can use to analyze, or to get the gamma levels from. Sorry, I'm just logging into Voland for a second here. Just give me a moment. All right. So this is Voland. Let's get over to the exposure page and let's choose. Oh, you asked about the SPY. You can also use the SPX. I would recommend to use both instruments to actually derive the gamma levels from. So here you got the SPY. So what you can see, there's a lot of negative gamma here on the downside. Actually, the current market price is deeply in the red area here, in the negative gamma area. So we can assume there's going to be a lot of volatility, while up here there's a lot of positive gamma. But that's not the topic for today. Let's just say we want to use the level of 525. On the price of 525 in the SPY future, we can see that there's a lot of negative gamma down there, and we want to draw this level, somehow draw this level into our ES chart. So what we're first doing is we're picking up the SPY chart. That's here. And you got two possibilities now. You can either have a look at the last price of yesterday, the closing price of yesterday, of the SPY yesterday, which in this case is 529.88. And at the same time, you can see here the SPY is an ETF. It closes at 21.55. On the same time, you can open up the ES chart. Which is here. Let's just switch over to regular trading hours. And we would also like to have a look at the 21.55 candle, because actually the AES is open for 15 more minutes than the SPY. So we have to calculate from here. So this is the price of 5,325. So what you now calculate is the relation between those two closing prices and the gamma level, the potential gamma level of the SPY to the potential gamma level in the ES future. So of course you can use an Excel file to do so, but you can also make it much easier by just measuring it here right in the chart. Let me show you how I do it. It's really simple. You take the closing price and, sorry, I forgot the gamma level that we actually want to calculate. 525. So you're taking the closing price and now you're just measuring down to 525, which would be 0.92%. And now you're actually measuring 0.92% from the same candle with the same closing price here in the ES, which is a bit deeper than expected here. Sorry. Here. And from a mathematical perspective, the gamma level would be exactly at 5,276.5. Sorry, the alarm just started here in our apartment. Please give me a minute. I hope it stops. Okay. The strange thing here in Dubai is that all the alarms in the building are connected to each other. And this is a 56-story, 56 level building, and we're in the 15th floor here. And just in case someone in the 45th floor is just cooking something and producing smoke, and actually causing the alarm to take off, the alarm starts in every apartment in the whole building, which can be a bit annoying, but it doesn't happen so often, so everything's fine. So this is the approach from a mathematical perspective. However, the problem is that the relation between the SPY and the ES future is dynamic. It's constantly changing. So of course, you can just use this mathematical approach and just draw a line on your ES chart right at these 0.92% negative. but from my experience, you will not see a lot of really good and valuable reactions to those kind of levels if you just draw them in on this mathematical approach. So what you want to do is you want to always combine these calculated gamma levels with other factors like liquidity and like volume profile levels and other objective facts to actually validate that this is actually the price that the market makers are going to hedge or adjust their hedging position. We are actually teaching the exact step-by-step approach in our dealer hedging course, but as I said, please give us like 2 or 3 more months until we produced everything in English. Okay, so let's get back to the world of futures here. Sorry. And have a look at the ES future and the market opening. First of all, as always, we're gonna make a short kind of analysis. As you can see, we got a strong downwards movement during the pre-session and also right now just after the market opened. But nevertheless, we wanna analyze the market like we always do, and that's by having a first look at the charts. This is a very common 5-minute chart that you can see here. We've got 2 kinds of profiles. The left one, the bit more faint one, is the profile of the pre-session from 12 a.m. to 3:30 p.m. Central European time. And this is the classical cash session, the regular trading hours from 3:30 p.m. to 10:15 p.m. First level that we always want to draw in is the yesterday's high, which I usually make yellow. Very important, levels are never just lines that I draw into the chart, but always price locations. We do not want to draw them too broad or too narrow, but always to see a certain kind of price area where we expect the market to react, not just a single price, because the price usually doesn't react with tick accuracy to those levels. All right, yesterday's low in a teal color. One level that I recommend to check out and to always draw into your chart is the closing price of yesterday's VWAP. And what I'm using here is the VWAP from the complete day, not just the cash session, but the complete electronic trading session. You can see on a day-to-day basis that the market will react to this level very reliably. What I also like to draw in is the closing price of the pre-week's VWAP closing price, but I just realized I do not have this in this template here. So, however, we're just leaving it out. As you can see, in the Asian session, market was building this little range here above the VWAP closing price, then broke through it, and since that time it just keeps on falling until it came down to the yesterday's, let me just see what happened here, until it came down to the yesterday's low. First approach, it reacted here and it rejected the price level. Second approach, it reacted again, but then finally broke through, made this little pullback movement, and since then is again running lower and lower. So we clearly got a downtrend for today. Nevertheless, in the bigger picture, this is the 1-hour chart. We're still in a very active and healthy upwards trend, while we can still say that since the 15th of May, the market tends to range between the 5270 and 5370 points. So we're currently in a sideways movement, and yeah, let's see if the market can actually hold the bottom of this last pullback here, or if we're actually seeing even deeper prices. Very interesting. So currently and for today, we're in a downtrend. So what I'm doing before every one of my trading sessions, after doing the market analysis, after drawing in my levels into the chart, I'm gonna have a look at the economic calendar. Your free choice of which one you're using there. I'm using the one from investing.com. It's very reliable. I'm scrolling downwards, and I'm actually having a look at each and every news that got 3 stars and that are actually related to the US dollar. As you can see, today there's no bigger news that can somehow interfere with our trading. So, general tip, if you see some kind of news event that has 3 stars, I would strongly recommend to exit all open trades at least 5 minutes before the news event. And what we can usually observe when it's like 1 or 2 minutes before the news events is that the market makers pull out their liquidity, the order book, and therefore Bookmap itself gets really dark, gets really black. As soon as the news event starts, the market seems to be volatile, makes strong movements in either direction, because there's actually no liquidity there, no liquidity left that can stop the market from moving fast. And we want to always wait until liquidity comes back into the market, until the market stabilizes, until the market makers put back their limit orders up into the book. And as soon as the market stabilizes, we want to think about new trading opportunities and not earlier. Before we go on, let me just have a look if there are any questions on YouTube or Discord. YouTube, no. And Discord, no. To everyone who came into the stream recently, please feel free to use the chat function of YouTube or the chat function of Discord and ask your questions. I'll give my best to answer every one of them. Okay, so let's have a look at the chart and let's have a look at Bookmap first. So obviously we are in a downwards movement. What can we objectively observe? First of all, the market broke through this blue line. Oh, by the way, before I tell you anything more, you can see those colorful lines, drawings here in my Bookmap chart. This is actually the market analysis that I did together with my students in the day trading education, that we actually draw into the chart this morning, and that's where that's what I use for my own trading systems and for my own trading approach to trade with. And of course, here in the public streams, I can only show you some basic levels without diving too deep into this topic, because it's very complex and very wide. However, what you're seeing here is my real market analysis that I did this morning. So back to the blue line. The market broke this blue line around 1:30 p.m. Dubai time today. And what this blue line is, we call it the risk interval. It's based on a calculation that itself is based on the recommended, how do I say it, the CME the exchange where the ES future is actually traded, publishes a recommendation for clearing firms and brokers on a daily basis of which amount they would recommend the margin sum for each future to be. And based on this recommended margin sum from the CME, we can calculate this risk interval. So this is actually a price area, I would say, where institutional traders or that institutional traders use to calculate their own risk. And we can call the market healthy and rational as long as the market stays within this risk interval. It's always the same points from the closing price of yesterday's chart. So we use the closing price here, and in this case in the ES right now at the moment at this point of time, it's 32.5 points to the upside and 32.5 points to the downside. As soon as the market leaves this risk interval and breaks to the upside or to the downside, the market tends to go over into some kind of more irrational state. So it's harder to predict what the market is actually doing. The market reacts less reliable to certain price areas. There's a lot of margin calls that are actually caused by the market. And I always recommend to my students, as soon as we leave this risk interval, be very careful with your trading. Lower your positions or even sit out the trade or the whole day at all in case the market is not moving back into this risk interval area. So this is a very important price location that we usually don't want to see the market to break. So in this case it happened, and as you can see, there's a lot of volatility came in, and as soon as the market did so, so as I said, this makes the market a bit harder to predict, a bit more random, you can say. So in terms of liquidity, let's take a look at the book and just zoom out for a bit. So we've got this dark blue line down here. This dark blue line is part of the Trade Finder plugin, which I like to use for Bookmap. Oh, by the way, back to the software question that we answered earlier. Do you use any software beside Bookmap and Atlas? Actually, I do use the Trade Finder, but it's not really a software for itself, but more a plugin extension for Bookmap, which gives you some very valuable calculations. Like it uses the MBO data to calculate stop runs. It calculates, like this line here, it calculates imbalances. So it looks, it doesn't only sum up the liquidity lying below the current price in the bid versus the liquidity on the upper hand in the offer. This, of course, this would also work, but the problem is that there is, as you all know, there's a lot of spoofing right around the current price of the market. So we wanna usually filter this out. So this line is calculated. Let me show you. Trade Finder. Balance tracker. Yeah, this level only calculates liquidity lying between 5 ticks from the current price up to 70 ticks from the current price to the upside and to the downside. And therefore, it does not include into its calculations liquidity that is currently at the price, where, as I said, there's a lot of spoofing. and also not includes liquidity that is too far away from the price, even though this kind of liquidity can play a big role. But for my calculation for the line that I want to see here, I only use the levels between 5 and 70 ticks. And as we can see, the line is dark blue and below 0. This means that we've got an imbalance in the book here in the bid right now. And a theory behind that is that the market always tends to follow the liquidity. The market wants to go where liquidity lies, because that's where the auction can run on a much more can run in a much more effective way. So we are in a downtrend. Sorry, I kicked my camera again. We are currently in a downtrend. We can see the market left the risk interval. It also did not have much of a hard time of breaking this positive gamma and dark pool structure. So liquidity mainly lies below the current price. So my bet would be that we will probably be safer to find trades on the short side for today. However, as long as the market moves below this risk interval, I am very, very careful with entries, and I personally would want to wait until the market gets back into the area where it's supposed to be within the risk interval, and wait for trading opportunities there, especially into the bigger picture direction, which would be long. As soon as the price remains above the 52.70 area, I am still bullish, and I still prefer to look for long opportunities. However, today, of course, I would not place myself towards or against the current strong price movement or into the short direction. So I really want to see some strong buying before I would even think of new long trades. On the other hand, I currently don't want to be a seller too. So this would be the kind of day that I personally would probably sit out and wait for a clearer and much more easier to trade image. But if I had to take a bet, I would probably try to look for short opportunities here in the area of the positive gamma, or maybe on the yesterday low. But in case the market manages to somehow get above the yesterday low level, there are slight chances that we can find some long opportunities too. All right, it's 3:58, session's almost over. So let me just, at the end of the session, let me just at the end of the session show you our Bookmap deals in case you're new to the software and you want to find some offers to get the software for a cheaper price. Please feel free to check out sparring-academy.com/bookmap. We have a special section there which is called special offers, and we offer the Global Plus quarterly subscription for €145 instead of 292 for the first 3 months. Also the Global Annual subscription for €579 instead of 933, which is a very good offer from my point of view. And we also have the Global the Global Lifetime version for €974. If you want to trade out of Bookmap, if you want to connect Bookmap to your brokerage account and open your trades right from the software, manage your trades within the software, then you would actually need Global Plus. If you just want to use Bookmap for analysis purposes, Global version is enough and does the job. Also, if you're interested in commodity trading, I would recommend you check out our software tradeneon.app. We've got a lot of tutorial videos in English language too. It's a great software to analyze the futures markets, especially the commodity markets. Maybe you're trading gold futures or crude oil futures like I do. It's a great software to actually get some extra fundamental advantages on your side. Feel free to check it out, and in case you get any questions, please write us an email to mail@sparring-academy.com. All right, guys, that's it for today. Let me find my camera here. Oh, it froze. Why did it freeze? Let's see. Can we get it back? I don't know. Let's just use this one. All right. Thank you for attending the session. I hope you liked it. In case you're watching the recording, as I said, please feel free to use the comment section to write us your questions or write us an email, mail@sparring-academy.com. I'm glad to hear from you. Have great trades, have a good day, have a great week, and the next English session will be on the last Wednesday of June, as always, 9 a.m. Eastern Standard Time, 3 p.m. Central European Time. See you guys then. Thank you. Have a good day. Bye-bye.